So, what's the top performing option strategy over the last 35 days? Well, stay tuned because that's what we're talking about in today's video. So first things first, we're going to take a look at the price action of SPX, and today we increased 0.8%, and the VIX today dropped 0.91 for 1.42%. And the VIX now, I believe, is really close to the same level that it was when we started these trades 35 days ago. So next, let's take a look at the short Condor. The short Condor that we have on is now up 24,438 for 119% return. Yes, that's 119% return. Now, another thing that you want to note is that the opposite trade, if you were doing the regular long Condor, well, it would be underwater the same amount, 24,438. So don't forget that. Now let's talk about how this trade has made a very nice return over the last 35 days. Well, first, the price has really been moving up, and we moved up, 4% by last week, maybe a little bit more this week, so perhaps about 5% for the last 35 days. And as we're going to see, the price changes right now are really impacting these trades more than anything at all, such as the theta and the volatility. So when we look at this trade, we can see that, wow, it's not anywhere near the middle, and we're moving towards the right, and just a little bit farther, and this trade could really just hit it out at the park. So again, we still have roughly, 16 days or so on these trades, currently in the trade 35 days. Now today, the VIX dropped a little bit, but it didn't really impact the trade because it's mostly profiting from that price action. And we also note that the theta position on the trade is negative 732, but we're not really seeing any of the impact of the theta because, again, these price moves are much stronger than the theta and even the volatility at this point. Again, we had a little drop of volatility, and this position has a 1.6 thousand Vega position, but even though vols dropped a little bit, it still didn't really impact the trade. This trade's doing excellent, needless to say, up 119%. Let's look at the next trade. So back to the short Strangle. Well, now it's had another bad week, and the trade is down 7,845. It's down about 39% at the moment. And again, as we look at these trades, remember that the opposite trade, for example, if you were doing long Strangle on this trade, just the opposite, instead of selling the call and the puts, if you were buying the call and puts, well, you would be up over $7,000 on the trade. So always keep that in mind, because if you're trading a strategy and you're struggling and you're constantly fighting the market and you're losing, well, you have to do is the opposite trade. So a little bit more about this one. Okay, so we've only moved about 5% over the last 35 days. In other words, we're really only moving about 1% a week, maybe something like 0.2% in a day. And you would think that the Strangle strategy would have enough theta to really profit when you're only moving 0.2% a day. But we see from the example that no, we're not profiting from the theta, and a 0.2% is really not a small enough move for this position to really make money. Now we also want to account for the current volatility level. So remember, we're in the lower levels of the VIX, and so every time the vols drop, they're not really dropping that much. And in fact, some of the days the market's moving up and the VIX is also moving up. So what it's done to this trade is, well, essentially you're not really benefiting from the theta because that's being choked off by the slight increase in volatility. And then even when the vols come back down, well, it's already been hurt from the price moves. Keep that in mind. So looking at the calendar, well, now see, even this trade is in the red. So what do we learn from this one? Well, the volatility was originally increasing and it was really benefiting the calendar. But now the vols have moved down just as much as they went up. and so now the calendar has really given back all of its profits. Furthermore, the trade has essentially now moved out of the body of the calendar. In other words, it's just moved too far to the upside. So now we don't have the benefit of volatility helping this trade anymore. And now we're seeing all the damages caused by the directional move. And even though this trade has a positive or a long theta position, it's really such a small part of the trade, it's almost irrelevant at only 15 points per day at the moment. It was over 100 before. So what do we learn from this trade? Well, it was doing really well before, but a lot of that was really coming from the increase in volatility, which was profiting this trade from having that long Vega position. But now that volatility has come back down, there's no more profits from the Vega, and we're essentially just losing from all of these directional moves, and the theta isn't helping the position. So that's a wrap for today. The current winner at the moment is the short Condor, and it's really benefiting from these directional moves because vols aren't dropping very much, so it's not hurting the trade. And the theta position is not really impacting the trade nearly as much as a directional move. So we're just really having a really nice return on this short Condor position, and that's really been the winner of the month. So I hope you've enjoyed this video, hope you learned something, took away something new, and I'll catch you in the next video. Have a good weekend.